Talk about the market's performance. Certainly, everybody's excited about it hitting that 26,000 mark. I know you're one of the optimists. You actually said you expect the upward trend to continue, of course, as investors wait for Q3 results. But yesterday, we did have an analyst in the studio saying, why are we so excited? Around 2008, 2007, we were at 66,000 at this time of the year. So what's your take on that?
Well, like the analyst said yesterday, we're still far behind from where we used to be, and the market is showing sign of a recovery. It's not it's a recovery that is long due. It's been due for the past year or two now. So for the fact that we are seeing this recovery now, it's good news to the market. Again, as long as earnings continues to go up as they are right now, again, we expect companies that posted good earnings on the half year to post good earnings again in this third quarter. And as long as that carries on, we expect the market to carry on the bullish trend. We're not going to hit the 60,000 points anytime soon. Possibly in a year or two, the market will recover to that point. But currently, the bullish run is here to stay, and we expect the bull run to continue for the fourth quarter.
But Idris, you did note as well that we saw activity dip to about 44% yesterday. In fact, they said shares worth 1.67 billion naira were traded the lowest turnover since September. What's your take on why this happened?
Well, there is also what we call the Monday effect in the market. So it could be a Monday effect, a lazy Monday, possibly. But currently, I think we expect turnover to hit about 3 billion naira today. That's mostly because of the market making activity. The market making activity didn't really do much yesterday, but today the likes of First Bank, Nestle, Dangote Sugar are all market making stocks, and those stocks are heavily traded on the exchange anyway. So we expect optimism, especially when it comes to the banking stocks.
Certainly banking stocks, consumer goods stocks seem to be where the investors want to go. But I want to note the insurance sector. I always mention it. It's one of the worst performers, but lately, excuse me, it seems to be coming up. We talked about ICO insurance performing quite well. Investors seem to be quite bullish on that stock. Mansard Insurance as well. What's your take on that sector?
Well, for the insurance sector, we believe it's actually a sector that needs to go through consolidation. It's currently too fragmented. There are probably too many insurance companies on the exchange right now. Because the sector is fragmented, we're going to see a lot of takeovers or mergers coming up very soon. We've seen a few already this year for the insurance sector. Mansard, as you said, was bought over. It used to be GT Assurance, and Mansard is one of the strong insurance companies. Also, Custodian and Allied Insurance is one that is quite good. In terms of ICO, last week ICO was added to the market making stock. So ICO uptrend is literally because of the market making activity. Again, we expect profit taking to take place in the following week or in the next few days. ICO has done it did 9% on Friday. It did 8% yesterday. Again, that's too much increase based on the fact that fundamentals hasn't really changed for ICO. Why has it moved up? Because of market making. I think it's a very cheap stock that market makers can make something happen in, and provided they do something, I think market making will make ICO tick up, but I think there will be profit taken in that next week.
Very quickly, what do you think there's still an investment case for these insurance stocks? There's certainly going on around the sector in terms of reforms right now.
Insurance is a good business model. One of the biggest investor globally, Warren Buffett has an insurance company he manages himself. We believe the insurance sector need to go through a consolidation process like the banking sector did. We need to reduce the number of insurance companies, and they need to focus more on insurance business. There is a lot of opportunity for business in this country. The flood that is happening around the world or around the country right now is an opportunity for insurance firms to actually do more business again. But there needs to be consolidation in the sector.
Now, let's talk about the top sectors going forward. Early on you mentioned to me the consumer goods sector is where you'd like to pick out some stocks, but there are other sectors such as the agribusiness sector. You talked about Okoronkwo oil and Presco. What's your take on that particular sector and the investment case for that sector?
Well, the agri sector in Nigeria, again, agri contributes about 44% of GDP, and it's not the fastest growing sector in the economy. In fact, the growth in agri sector has slowed down. We expect that to continue. Is currently just over 3%. That will continue into the third and fourth quarter because of the recent flood. But when it comes to Presco and Okoronkwo, these are palm oil making companies, and palm oil is actually a sector that needs a lot of rainfall. So the rainfall hasn't affected them.
Right.
The earnings for those companies have ticked up since since about 2009. Okomu saw an increase in profit of about 140% last year, and we expect that to continue. Although the current dip in the price of palm oil and rubber will affect the company's earning, but we expect the company to actually still beat last year's earning and increase by about 10-20%. Also, in terms of dividend, it's one of the highest dividend-paying stocks on the exchange. It has a dividend yield of over 11%, which is very good. Okomu gives you income that is equal to that of the Nigerian government bonds or greater.
So good Q3 numbers expected with that stock.